Canada as the 51st state? It sounds like a bold move straight out of a geopolitical thriller, but with President-elect Donald Trump's return to office, this intriguing proposal is stirring conversations worldwide. Kevin O'Leary, a prominent Canadian entrepreneur and investor, calls it an idea with massive economic potential. What's at stake here? A chance to redefine the economic landscape of North America by combining the unparalleled resources of Canada with the economic machinery of the United States. Think lower taxes for Canadians, shared energy grids, and a seamless trade environment that could catapult both nations into an era of unprecedented growth. But is it really that simple? Canada is rich in natural resources, oil, water, and timber, but integrating two economies with different policies, cultures, and currencies poses significant challenges. Still, the potential for economic synergy has experts and policymakers wondering, could this transform North America into an unstoppable global powerhouse? Over the next few minutes, we'll break down the economic arguments, explore the opportunities, and tackle the obstacles that stand in the way of such a monumental shift. By the end, you'll have a clearer understanding of whether this idea is a visionary economic strategy or simply an ambitious political fantasy. Don't miss a single detail. Hit like, share, and subscribe to Economy Explorer to stay ahead in decoding the global economy. Let's dive in. The power of shared resources. When you think of economic powerhouses, what comes to mind? For many, it's countries with abundant natural resources, robust energy systems, and seamless trade networks. Now imagine combining the vast resource wealth of Canada with the technological and industrial might of the United States. Canada's oil sands alone hold some of the largest reserves in the world, offering a stable and reliable energy supply. Add to that the nearly unlimited hydroelectric power from provinces like Quebec and British Columbia, and you begin to see why this proposal holds such allure. The U.S., meanwhile, struggles with a tapped-out energy grid, desperate for expansion. This isn't just about filling a gap. It's about creating an energy surplus that could redefine global energy markets. And it's not just about energy. Canada is also a global leader in natural resources like timber, minerals, and freshwater. In fact, Canada is home to over 20% of the world's freshwater reserves. For the U.S., grappling with water shortages in states like California and Nevada, this resource could be transformative. The synergy of pooling these resources doesn't just solve problems. It positions North America as an unrivaled economic and environmental force, economic growth through trade. Trade has always been the lifeblood of economic growth, and a unified Canada-U.S. trade zone could take it to the next level. Currently, trade between the two countries already accounts for over $700 billion annually, but barriers still exist. Tariffs, regulations, and inefficiencies that slow progress. A unified economic framework could remove these roadblocks, creating an environment where businesses flourish on both sides of the border. Picture seamless supply chains, quicker trade routes, and reduced costs for industries ranging from agriculture to technology. What could this mean for businesses? Faster innovation, stronger competitiveness, and more jobs for everyone involved. But the potential doesn't stop at the border. A unified North America could set new standards for global trade. As economies like China push their influence, a Canada-U.S. economic partnership could serve as a counterbalance, attracting international investments and reshaping global trade dynamics. With such potential on the horizon, one can't help but wonder, what's holding this idea back? A legacy of trade, Canada and the U.S. The economic relationship between Canada and the United States has long been a cornerstone of prosperity for both nations. For decades, the two countries have shared one of the largest bilateral trading partnerships in the world, totaling over $700 billion annually. But this trade relationship is not without its hurdles. Tariffs, regulatory differences, and supply chain inefficiencies often create friction, slowing the flow of goods and driving up costs. Could a unified trade policy be the key to unlocking even greater economic growth? Consider the potential impact: reduced tariffs, harmonized regulations, and faster trade routes that would allow goods to move seamlessly across the border. This could mean cheaper goods for consumers, higher profits for businesses, and a stronger competitive edge for North America on the global stage. Now, think about the opportunities for industries that have faced barriers under the current system. From Canadian farmers seeking easier access to U.S. markets to American manufacturers relying on Canadian raw materials, the benefits of streamlined trade policies could ripple across countless sectors. The vision is bold, but the possibilities are endless. Yet, with every opportunity comes a new set of challenges. The policy shift: building a unified economy. To realize this vision, significant changes in economic policy would be necessary. One of the most transformative shifts could be the introduction of a common currency. While this might simplify cross-border transactions and stabilize exchange rates, it also raises questions about monetary policy control. Would Canada and the U.S. be willing to compromise their fiscal independence for the sake of economic unity? Beyond currency, a unified labor market could open doors for workers on both sides of the border. Canadian professionals might find easier pathways to high-paying U.S. jobs, while American industries struggling with labor shortages could tap into Canada's skilled workforce. But what happens to local industries that might face increased competition under such an arrangement? Would the economic gains outweigh the risks? As we consider the intricate policies required to make this vision a reality, it's clear that the road ahead is complex. But with complexity comes innovation, and these discussions are just the beginning of imagining what a truly unified North American economy could look like. So, what comes next? Let's take a closer look at the broader implications of this bold strategy. Economic powerhouses, comparing GDP and growth potential. When comparing the economic strengths of Canada and the United States, the differences are stark yet complementary. The U.S., boasting a GDP of over $25 trillion, is the world's largest economy, fueled by a diverse industrial base, technological innovation, and a massive consumer market. Canada, with a GDP of $2.2 trillion, may seem smaller in scale, but it punches above its weight in resource wealth and quality of life indicators. Imagine the possibilities if these two economies were to unite, not as competitors, but as partners. The combined GDP would surpass $27 trillion, creating an economic behemoth capable of reshaping global markets. Canada's economy thrives on exports, with over 75% of its goods heading to the U.S. But this reliance comes with vulnerabilities, especially during periods of U.S. economic volatility. On the flip side, the U.S. benefits from Canada's stable supply of critical resources like oil, lumber, and fresh water. Together, these strengths could form a more resilient economic bloc, better equipped to weather global challenges. Yet, this comparison also raises questions. How would a union address the disparities in economic scale and industrial focus? Industrial strengths. A perfect match? Canada and the U.S. each dominate different sectors, creating the potential for unmatched synergy. Canada excels in natural resource extraction, agriculture, and renewable energy, making it a powerhouse in raw material production. The U.S., by contrast, leads in manufacturing, technology, and financial services, offering the infrastructure to transform Canada's raw resources into high-value products. Take, for instance, the automotive industry. U.S. automakers could gain direct access to Canada's minerals crucial for electric vehicle production, reducing dependency on foreign suppliers. But how would this integration play out in practice? Harmonizing industrial policies across both nations could be challenging, especially in industries like agriculture, where subsidies and regulations vary significantly. Still, the potential for collaboration is immense. For example, joint investments in green technology and energy infrastructure could position a unified North America as a global leader in sustainability, attracting international investment and setting new standards for innovation. The human factor, workforce, and demographics. Beyond industries, the workforce of both countries presents intriguing opportunities. The U.S. labor market, with its high demand for skilled workers, could benefit from Canada's educated and bilingual population. Meanwhile, Canada, facing an aging demographic, could draw strength from the U.S.'s younger workforce and dynamic entrepreneurial culture. This balance could address labor shortages in both nations while fostering cross-border innovation and cultural exchange. Yet, one critical question remains. How would workers adapt to such a significant shift? Merging labor policies and addressing potential job displacement would require careful planning. But if done right, the integration could create a workforce ready to tackle the challenges of a globalized economy. What would this mean for everyday workers, businesses, and families on both sides of the border? That's what we'll explore next as we dive deeper into the ripple effects of a united North American economy. A unified front economic strategy for a changing world. Throughout history, the world's most successful economies have been built on alliances, whether through trade agreements, shared resources, or strategic partnerships. Today, as the global stage grows increasingly competitive, a potential U.S.-Canada economic union offers an unprecedented opportunity to create a geopolitical powerhouse. Consider the challenges posed by rising powers like China, which has leveraged its economic might to reshape global trade norms. A unified North America could counterbalance this influence, offering an alternative model rooted in shared prosperity, innovation, and stability. The strength of this partnership lies not only in resources or trade, but in strategic positioning. The U.S. has long been a leader in technology and military innovation, while Canada boasts critical energy reserves and vast natural resources. Together, these strengths create an ecosystem where economic dominance can translate into geopolitical leverage. Imagine a world where North America controls the supply chain for critical minerals, develops energy independence, and leads the charge in green technology. Such a scenario could shift the balance of power in global markets, making it increasingly difficult for adversaries to undermine North American interests. However, this strategy requires more than just resources and ideas. It demands a unified vision. How do two countries with different economic policies and political systems find common ground? The answer lies in leadership and a shared commitment to shaping the future. If North America were to align its economic priorities, the potential to outpace global competitors and fortify its position as a leader in commerce, technology, and sustainability becomes undeniable. As we close this discussion, remember that the decisions made today will ripple across decades. Could this bold proposal change the trajectory of global economics? Let us know your thoughts in the comments below. And if you enjoyed this analysis, don't forget to like, share, and subscribe to Economy Explorer. Watch one of our suggested videos to keep exploring, and thank you for being part of our growing community.